Hello everyone, today we'll be going over accounts, May June 2021, paper 2-1, question number 2. So the structured paper 2 is of 90 marks and it has a time limit of 90 minutes as well. And since this question 2 is of 15 marks, we will be attempting to solve this question under 15 minutes as well. Let's get started. So Karius and Lana are in partnership, and we need to state two reasons why partners may each have a separate capital account and current account. So I'll give one reason for a separate capital account and another reason for a separate current account. So let's start with capital account first. So essentially in capital accounts, we record the permanent investments made by each partners. So that's why separate capital account is required. Let's write that down. So separate capital accounts to show the permanent investments made by each partner. The second reason will be for a separate current account. We know that in a current account, we record the ongoing transactions between the partners and partnership. It shows whether the partnership owes any amount to the partners or whether the partners owes any amount to the partnership. So that's the main reason for separate current account. Let's write that down. Separate current accounts to show the ongoing transaction between the partners and the partnership. Alright, this completes the first part. Then we're given the additional information. So Karius and Lara share profits and losses in the ratio 3:1, and they decided to admit Megan as a partner on 1st February 2021. So we are given the statement of financial position on that date as well. Then we are given the terms on which the partners agreed for Megan's admission. Alright, so we need to prepare the capital accounts of the partners to record the admission of Megan as a partner. We know that the capital accounts first records the already existing partners' capital balances, right? So let's do that first for the partners already existing, which is Karius and Lara. So we will be starting with the balance brought down. And that will be for Karius and Lara only because Megan is a new partner that is being admitted. So we're given the capital accounts right here for Karius and Lara. So that's 35,700 and 24,500. Let's write that down. Now let's see the terms of partnership. The first one is that current accounts would no longer be used. So whatever current account balances was there, we need to add it to the capital balances. So we can see the current account balances right here for Karius and Lara. And we can see that one is a positive amount and another is a negative amount, which means that this amount will be added to the capital balances, whereas this amount will be subtracted from the capital balances because the partnership owes 3,110 to Karius, whereas Lara owes 540 to the partnership. So let's write that down. We have current account, which increases the capital account balance for Karius, and that is the amount of 3,110. Whereas we have the balance of 540 for Lara's current account, which decreases her capital balance. So that's going to be 540. All right, so we've made use of the first information. Let's look at the second one. Karis took over a motor vehicle for private use with a net book value of 18,400 at an agreed value of 15,000. So Karis took the motor vehicle, and in order to do so, he has to pay the amount of 15,000 to the partnership, which means that Karis now owes 15,000 to the partnership, which will be recorded on the debit side of the capital account. Let's note that down. So that's a motor vehicle with the value 15,000. All right, but we also need to see that it had a net book value of 18,400, but Karis only paid 15,000, which means that there is a loss on revaluation, right? So the loss on revaluation is of 18,400 minus 15,000, which is going to be 3,400. So that's the loss. And losses are to be shared among the partners, right? And what we know is that the partners Karis and Lara share profits and losses in the ratio 3:2. So this loss of 3,400 should also be shared between Karis and Lara in the ratio 3:1. Let's do that. So that's going to be loss on revaluation. So we had the total loss of 3,400, but for Karis, that's going to be 3. For Lara, that's going to be 2. So we can just simply calculate it as 3,400 into 3 by 3 plus 2. That will be the loss for Karis. And for Lara, that's going to be 3,400 into 2 by 3 plus 2. So for Karis, it amounts to 2,040. For Lara, it amounts to 1,360. Let's write that down. All right. So we are done with the second point. Then the third one, goodwill was valued at 48,000. No goodwill account was to be maintained in the partnership books of accounts. So we need to now record the old goodwill amounts and the new goodwill amounts based on the old profit sharing ratio and the new profit sharing ratio. Let's do the first one for the old goodwill. So old goodwill is always recorded on the credit side. Let's do that first. Now for Karis, the goodwill is just going to be 48,000 into 3 by 3 plus 2 because we still use the old profit sharing ratio. And for Lara, that's going to be 48,000 into 2 by 3 plus 2. So this amounts to 28,800 for Karis, whereas 19,200 for Lara. Let's write that down. Now we move on to the new goodwill. A new goodwill is determined on the basis of new profit sharing ratio, which is given right here. So Karis, Lara, Megan, the ratio is 7:5:3. Now let's calculate the new goodwill. So for Karis, that's going to be 48,000 into 7 by 7 plus 5 plus 3, which will be equal to 22,400. For Lara, that's going to be 48,000 into 5 by 7 plus 5 plus 3, which is going to be 16,000. And for Megan, that's going to be 48,000 into 3 by 7 plus 5 plus 3. That's going to be 9,600. All right, we're done with the goodwill part. So we included point 3 and point 4 as well. The fifth one, Megan introduced a motor vehicle valued at 23,000 as part of her capital contribution. So this is her capital contribution, which will be recorded on the credit side. And this is in the form of a motor vehicle, and it amounts to 23,000. So we've included the fifth one as well. Now, after making the adjustments, it was agreed that Megan should pay sufficient cash into the business bank account to make her total capital equal to that of Lara, which means that Megan's capital introduction is not just the 23,000 as part of the motor vehicle, but also cash paid. So we can just note it down as bank, but we do not know the amount yet. The amount is to be determined by equalizing the final capital account balance for Lara to that of the final capital balance to that of Megan. So let's just figure out the balance CD, which will be the closing capital balance for all three of the partners. All right, so in order to do so, we need to first total the credit sides for Karis and Lara. So for Karis, that's going to be 35,700 plus 3,110 plus 28,800, which gives the total to be 67,610. It should be equal to the debit side. Now, in order to figure out this balancing figure, we just need to subtract all these amounts from the total amount. So that's going to be 67,610 minus 15,000 minus 2,040 minus 22,400, which gives the balance CD to be 28,170. For Karis, we repeat the same process for Lara. So that's going to be 24,500 plus 19,200, which gives the total to be 43,700. So that's 43,700 again. Again, the balancing figure, we need to subtract all these amounts from the total. So that's 43,700 minus 540 minus 1,360 minus 16,000, which gives the balance CD to be 25,800. Now, this is the amount that should be equal to the closing balance on the Megan's capital account as well. So that's going to be 25,800. Let's figure out the total. That's going to be 9,600 plus 25,800, which gives the total to be 35,400, which must be true for the credit side as well. Now we can determine the bank amount, which will act as a balancing figure. So that's just going to be 35,400 minus 23,000, which gives the balance on the bank as 12,400. Now do not forget to introduce this closing balance as the opening balance for next year. So that's just going to be balance BD. For Karis, that's 28,170. For Lara, that's 25,800. And for Megan, that's again 25,800. So this concludes the second part of the question. Let's move on to the third one. In the new partnership agreement, Lara is to receive a salary of 12,000 per annum, and Megan is hoping to receive a 25% return on capital employed. Now we need to calculate the minimum profit the partnership must make in order for Megan to achieve this return on capital employed. So this is not the return on the total capital employed. This is just the return on the capital employed by Megan. So we know that the formula for the return on capital employed is profit divided by capital employed into 100%. So we require the return on capital employed of 25%. And we need to figure out the profit. And we have the capital employed for Megan, 25,800, which we just figured out in the second part of this question. Now the profit for Megan. So this is just the profit for Megan, right? Since we are only considering the capital employed for Megan. So this is going to be 25,800 into 25 by 100, which gives us the profit of 64.50 for Megan. Now we need to figure out the total residual profit, right? So total residual profit. And out of this total residual profit, Megan receives 3 out of the 15 portions because that's the profit sharing ratio, right? 7:5:3. So out of this total, 3 out of 15. So 15 is just the sum of the total ratios. That's 7 plus 5 plus 3. So this is going to be the profit for Megan, which is 6450. So now we can figure out the total residual profit. So this is just going to be 6,450 into 15 by 3, which gives us the total residual profit to be 32,250. But what we require is the profit the partnership must make. So this is not the residual profit, we require the total profit for the year. Now the total profit for the year is just going to be the residual profit of 32,250 plus the salary. So salary is of 12,000, and since we deducted the salary amount to receive the residual profit, we're going to add the salary amount in order to figure out the profit for the year. So that's plus 12,000, which gives us the total profit required to be 44,250. This completes the third part. Let's move on to the fourth and the last part. So we need to state two possible disadvantages to existing partners of admitting a new partner. So the first one is clearly dilution of ownership. So dilution of ownership means that, all right, when there are only two partners are sharing the partnership or the company. But if you admit a new partner, then the profit or the ownership might decrease. Previously, when there were only two partners, so if you're equally investing in the partnership, so that's going to be 50% ownership, right? But if you admit a third partner and share the business equally, then that's going to dilute the ownership to 33.33%, right? So that's a big issue to existing partners while admitting a new partner. And the next issue is also the sharing of profits, right? Because if we admit a new partner, we need to share the profits with that new partner as well, so which just reduces the profit of our share. So that's just profits have to be shared. All right, this concludes the fourth part as well as the question. If you found this video useful, make sure you hit the like button, make sure to leave a comment below, and make sure you subscribe to the channel and hit the bell icon so that you do not miss any videos in the future. Thank you.